Here I have two questions. One, which all markets do you see in Canada which are expected to do well in next 1.5 to 2 years? Number one. Number two, with the rising interest rates, how do you see the say the rental yields coming down and its impact on the real estate market in Canada?
Okay, I'll try to start with that question first. We are, because of what I said is happening in the major markets with the slowdown in real estate, that is primarily driven by the increase in interest rates. The Bank of Canada raised interest rates 3 times now over the last 6 months, and this has been the biggest increase in 40 years. So we haven't seen this type of increase in interest rates since the 80s, the early 80s, right? So it's been a long time that we've seen this, but part of it, I think, is necessary because the market was so overinflated. And, the average person can't afford to buy a condo, let alone a home in some of the major markets like Vancouver and Toronto. So what the interest rates are going to do is they will start to push the prices down eventually. As I said, we'll see, some of the prices starting to move down in Q3, Q4 of this year, and definitely Q1 of 23. But regardless, what it will do is it will help some of the young people that want to live in Vancouver and Toronto buy real estate. Because right now they just can't. Even if they've got a great job with one of the tech firms, the cost of buying a condo in Vancouver, and I'll just give you sort of an average price here, like a 1-bedroom condo, they're $800,000 to $1 million Canadian, and not everybody can afford that. So there's also, besides the interest rates, rising to correct and normalize things, the government of Canada is also putting in a few new programs to try to encourage home ownership in some of the big markets. So they're creating incentives on deposit structures and loans and things like that to help these young people get into the market. So we're the correction is a necessary thing that's going to have some pain and suffering for some people, but on the other hand, it's going to help stabilize the price momentum and velocity we saw. So it's going to be a good thing in the long run. Sorry, and what was the first question? I just forgot.
Which all markets do you see in Canada coming up for the next 1.5 to 2 years, maybe a shorter duration to a medium duration to invest in?
So are you saying, you're asking which markets do we see demand or
demand coming up?
Yeah. It'll continue to be, again, it's hard to have a perfect crystal ball, but it'll continue to be the Vancouver area, and it'll continue to be Toronto. But I'll generalize it. The Vancouver area we sometimes call GVA, which is Greater Vancouver Area, and that also includes parts of that whole metropolis. And Surrey is a good example. Surrey is a suburb of the GVA, and coincidentally, that's where a lot of Indians live. And so we are seeing huge increases in population in Surrey. So I think that we're going to see opportunity in that area, Surrey, but also in Vancouver in general. In Toronto, they call it the GTA, which is the Greater Toronto Area, and we'll see people moving into the downtown area as well, because prices did drop a little more in the GTA, or sorry, in the downtown Toronto area, but we will see, I think, people wanting to buy in Toronto downtown so they can work for some of the big tech companies or some of the big financial institutions there. But we also will see in some of the outlying areas, we're continuing to see growth in those areas. Now, the one city that I think is undervalued is Montreal. Montreal is still a very large city, a couple million people live there, but it was really, the focus for a lot of people was Vancouver and Toronto. I believe Montreal is the opportunity for people to come in, and they're also trying to grow the tech business there. And there's a lot of good industry in Toronto. I always plug Cirque du Soleil because I love them. They're from Toronto, so their headquarters, from Montreal, so their headquarters are based there. But regardless, I really think because of the lower property valuations in Montreal, I think Montreal will show huge opportunities for appreciation over the next few years. There are other areas that we might see some increases in real estate as well. I'm in British Columbia right now in in sort of the central area, and there's a town here or a city called Kelowna, and it is also booming very heavily right now as well for a lot of people wanting to move in here. My neighbors that I see moving to Kelowna are from Ontario. They're from the Lower Mainland in Greater Vancouver area. But regardless, we're seeing pockets like Kelowna that are really doing quite well. Including we're seeing a lot of more ethnicities coming into this area that we haven't seen before. So getting back to, just that, I think Montreal is the opportunity for a big city. And I think there's lots of little pocket areas in all the other provinces that are going to see growth as well. And all because it's driven by immigration and it's driven by strong economy in tech and the oil business.
And just to add to this thing, one sub part of it, see, in 2008, we saw subprime crisis, which hit the financial markets in a big way, right? Do you see with the rising interest rates any threat of that thing coming up in the global markets or in the American or in the Canadian markets, which can say hit any of the banks or something of that sort?
Well, let me just talk about the subprime. I mean, I was in the US working when the subprime hit, and it was horrendous. I was working on a large project in Los Angeles. And that was, nobody ever thought it would hit that hard. Coincidentally, while we're impacted heavily by the US economy and the market, Canada really never saw the big crash that the US have. And mostly because we have 5 chartered banks here that have a little bit more conservative lending policy when it comes to mortgages and loans and things like that. So you didn't see, those type of subprime mortgage opportunities that the US saw with some of their banks, and that whole thing collapsed. In Canada, we were just more stabilized, generally speaking, but we definitely were affected, but we just didn't see those banks crashing like they did in the US. And also with what's happening now with the interest rates rising, the banks are all behind it. People are going to adjust. It's just, and it's going to establish Canada as a better, a better place to invest, just because of these rising rates are going to help just sort of stabilize things, stabilize the momentum and the velocity we've seen over the last little while. But one thing that's so great being from Canada is, while we do have conservative banks, there's some of the best banks in the world. In fact, a lot of the Canadian banks are also in the US. So I'll give you an example, like TD Bank. It's one of our 5 charter banks, and they have a pretty big presence, especially East Coast in the US. And I don't know today, but I remember a stat 2 years ago. They were at that time the 5th or 6th largest bank in the US. So we're going to see more and more Canadian banks starting to go into the US as well, like RBC and Scotiabank, et cetera. And I think, like their policy with, like I said, loaning and mortgages is so conservative, generally speaking. It'll be a good thing. And I think, we'll just have a better economy for it in the long run. But again, as I said, it's driven by immigration, it's driven by oil, it's driven by, we're a big resource country, and we will always have that.